Hi everyone, welcome back to my channel. So today's video is just an update on one of the plays I mentioned here on YouTube. So I just want to go over what was discussed and how the move actually has played out. So y'all can see here I'm under the post tab here on my channel. And 5 months ago I posted about the S&P because we know of course at that time the market was in a downturn. And it was causing quite a bit of a discussion. And at the time there was a lot of conversation about a potential recession. And y'all can see here that the S&P was actually down 9.61% YTD, which of course sparked major concern. However, at that time, I took the opportunity to make sure I updated everyone. Basically, I was just saying that the current market pullback wasn't necessarily a setback. I mentioned that it was perfect timing to invest in certain seasonal stocks like Shop, Amazon, etc. And it was a good idea to hold these. I then went on to mention the historical data was something you can look into because these names don't stay down for long. Because generally these stocks tend to show stronger performance during Q3 and Q4. I then went on to say that once volume returns, so do the gains. And because price dips don't last forever, this can serve as a strategic play for those who understand timing profit. I mentioned that this is when wealth gets positioned simply because consumer activity spikes during the holiday season, especially in the sectors and industries of e-commerce, fintech, and retail. And then lastly, I just simply mentioned that if you are aiming for long-term gains or prepping for a swing setup heading into the summer and fall, this was the perfect opportunity to do so, as it's always best not to sit on the sidelines just because the market's red, because this is where smart money gets to work. So basically, all in all, I just made sure to put this on everyone's radar as we moved into the summer season. And just to show y'all full detail and context so that everybody can see an actual date on this, it was as of April 22nd, 2025. So me posting this was very intentional to be in the heart of the springtime. Now this market pullback for me was not surprising at all, simply because it's a repetitive pattern that happens every year. So yeah, it's just a quick recap of what I discussed. Now I'm going to hop into Thinkorswim so y'all can see how this played out on the charts. Alright, so now I'm in Thinkorswim and you can see I have Amazon pulled up here. But I'm going to go ahead and adjust the time frame, and we'll go ahead and put it on the 1 year, 1 day, just so we can simply take a look at the information here. All right, I'm going to go ahead and zoom it in. So we're only taking a look at 2025 data. Now, again, I did make that post back in April, and we can clearly see here that it was at the all-time low for the year at $161.38. And since then, Amazon has actually climbed and had a rally to the upside, and we can see that it's currently trading for $216.37. So y'all, this is just a clear reflection of what tends to happen. And again, this is not anything that's new. I trade the same repeatable patterns every single year simply because they work and there's a high ROI. And the reason why these types of plays work so well and they're repeatable is due to the accumulation of seasonal changes. Consumer activity for the most part is historically going to concentrate in the same ebbs and flows because the stock market tends to follow the same similar patterns. Now, with me making this play back in April, some may see this month as a perfect time to take profit, while others may wait until after the holiday season is over and then take profits then. Either or is totally fine. It just depends on your trading style. Me personally, I like to go ahead and make sure I at least take some profit and then hold on to the winners and let those run. But if you are one that took action when I did post that information, then of course this would be prime time to go ahead and secure your gains. Now, I also want to mention that I'm not saying this to brag, y'all. I'm really just providing the information. And for those who may be new to my channel, I have shown y'all this before, but I'm going to go ahead and pull it back up on the 5 year just so y'all can see what it looks like. That way you don't have to take my word for it. You can see it here on the charts. So if we were to go back to the year 2020 here, we can see that historically this has been the case. Amazon stock was in a downtrend here in like October, November, but by the time we got to the end of the year, we can see there was a rally to the upside. And then when we fast forward to the year 2021, kind of same thing. When we look at March and April, springtime, we can see that the stock was also downtrending. But once again, towards the end of the year, we can see that it was uptrending, even though it did fall in a slight decline towards the very end. Now, 2022 was a bit of an anomaly because it didn't 100% stick to the pattern, which is why I always say that there's no guarantee on anything. So we can see that there was a little bit of transgression within this year, and it ended the year downtrending in 22. But in the year 2023, there was a bounce back. We can see in March and April it stayed consistent, with the stock performing near the all-time low. But there certainly was a drastic rebound because the stock ended the year trading for at least $150 to $155 in that range. And of course, same thing for last year. When we take a look at the springtime, we can see that the stock was in the range of $170 to $175. And then by the time we ended the year last year, the stock was all the way up to its all-time high for the year in the range of about $225 to $235. And then now, of course, taking a look at this year, this is the information that I kind of mentioned. Back in April, there was that dip, but we have fully recovered from that, and we can see the stock is trading in that same range of about $215 to $220. Now, keep in mind that this is no coincidence. The stock market performing in this specific pattern is not something that's happening by chance. There are major catalysts that are supporting these moves. One being, of course, institutional participation and lack thereof during certain seasons. So one major recommendation is to always make sure you have at least a trend backbone for any position trade you take. So whether you're analyzing the data historically in the manner in which I'm doing so, or if you're just taking a glance at the numbers as far as to how it relates to on-balance volume and the volume profile, that works as well. Because what this allows you to do is to detect accumulation and look for any type of volume spikes, hence being momentum confirmation. So if you see the momentum converging or diverging, you'll know exactly how to play this out. You'll also be able to identify high volume nodes as support or resistance. And if you're new to trading, basically all that means is that you're looking for the outperformance versus the broader market sentiment. And this can serve as a signal for where the big money is flowing and positioning for open interest. Now, technically, seasonality shows up in any big name ticker. So you always want to check for acceleration as consumer demand peaks for certain industries. But let me go ahead and pull up Shop so y'all can see that as well for Shopify. Alright, so staying along the same accord, we can see the pattern here back in 2020. October, November, we can see it at a low. But of course, during the holiday season, we saw that spike to the upside. 2021, same thing. In the springtime, we saw the stock fall into a downtrend, and it actually ended the year in the range of the all-time high for the last 5 years at $176.29, with just a slight pullback towards the very end. 2022, we saw some consolidation for a good amount of the year actually, and then it reached its 5-year all-time low back in October of that year at $23.63. But yet again, there was a quick recovery to the upside. Same thing in the year 2023 in the springtime. The stock was a bit choppy, but there was clearly some acceleration, and we can see that it ended the year at a high. 2024 was no different. We can see here in the spring that the stock was trading in the range of about $70 to $75. And then we ended last year with the stock trading in the range of about $115 to $120. And then, of course, last but not least, same thing for this year. When I made that call back in April, we can see the stock was at a low of $79.46. And now currently Shopify is trading for $151.02. So again, y'all, feel free to take profit as you see fit if you did enter the play when I called it. But if you didn't enter the play, don't feel like you missed out, because more than likely this will be a repeatable pattern that will happen once again in 2026. So if you didn't catch it this year, no big deal. You can just be sure to keep it on your watch list for next year. And then also always make note that retailers and platforms report stronger revenue guidance ahead of the holiday season, because inventory buys and promotional campaigns increase transaction velocity. And this, of course, attracts momentum funds and options activity. So it's always a good idea to narrow the range with rising OBV, which is basically the on-balance volume, and look for successive higher lows on weeklies. And if you see it then backed by a volume-fueled breakout candle accompanied by rising OI, that's a clear signal. Now, always keep in mind that you can set alerts for these specific types of plays. And in order to do so, all you would simply have to do is just right-click anywhere on the screen on the chart and go all the way down till you see where it says Create Alert. Now you can set a date range to show this because you'll see the parameters pop up. Now, of course, it's saying notify me on, and it shows you the ticker symbol. It also then shows you that the spread is set for stock, but if you hit the drop down, you can choose any of these strategies. And then underneath that, we see where it says price. You can hit the drop down for mark. You can choose the last, the bid, the volume index, front or back, the sizzle, close, or any study that you see fit. And then from there, it's telling us that it's either going to be at or above, at or below, below or above. And then here in this box, you can set the specific dollar amount that you want. Now you can also add OCO conditions to this. And I discussed that in a previous video, so I'll leave a link for that down below. And then once everything looks the way you want it, you can go ahead and put a note in this box, basically just describing what this alert is about. Now underneath that, you'll also see a preview, and it's showing you the chart. Now, one of the features I really like about Thinkorswim is the continuity. So you can move this alert up or down on the box, and you'll see that it'll also change the number here as well. So once you're completely satisfied with that, you can take a look at the notify with, and it'll have it for a sound. You can have it sent directly to your phone so that you're notified immediately. And then make sure to click on this box if you want it to show the alert book after you press create. And then from here, all you simply have to do is go ahead and click on create. Now, there's really no need to overcomplicate this, but if you were one to be a little more technical, I would say if you're looking at intraday VWAP retest, for example, look for the swing to day transition. Because if you see a spot where call skew and increasing OI confirm directional institutional trading, that can help you navigate through the setup. And for the most part, you can create a trade outline based on that information. And at that point, all you would need to do is just buy size on weekly reassurance based upon your evaluation. Now make sure that when you are placing these types of trades, you add on measured pullbacks to weekly support zones. And you can certainly hold through Q4 to take advantage of customer seasonality as well. Because we all know those days after the holidays are over with, people are still typically buying in stores and online. Now, I also would recommend that once the season is over and we do enter into that new year, if you haven't already, make sure you scale out appropriately. And the reason that's so important is because, again, once it falls back into the season, you don't want to give the market back your profits. So just be certain to pre-specify your exit triggers. Also, it is a good idea to make sure you're paying attention to the earnings calendars because specific cycles can impact the unit volume, and that can be attributed to like advertising spending, merchant fees. Any of those factors could be catalysts because these can push top line and margin trajectories for Shopify and Amazon. Even things like prime events and promotional windows, if these line up, these can also shape the price moves. And clearly we can see that the stock can experience rapid price expansion, which for some may just be relative to the performance and momentum of metrics that extend the run into late Q4. So just be on the lookout for what stands out the most. So yeah, y'all, these are the main things I wanted to discuss. Y'all feel free to let me know if you did take advantage of this play that I called, and let me know how it played out for you. And with that, that'll pretty much do it for this video. Y'all already know if you found any of this information to be helpful, feel free to leave me a comment down below. As always, I thank y'all so much for watching. And of course, I'll see y'all in my next one.